The truth about liquidity bonding, Heart's law, and the Atropa web, my friends. We're going to go through that today. I'm going to give you some tidbits, some great high-value information that I've discovered, and I'm going to present for you everything you need to know. So what is Heart's law, friends? Well, it's a term that Richard Heart made, Heart's law, and basically it just talks about bonding. It's like you bond stuff together, they go up and down together, okay? Actually, interesting, there was an economist who wrote about Heart's law in the 70s. There's another term for it. And it's basically, this economist said if there's liquidity rails between assets, when one goes up, the other tends to go up. And when one goes down, the other tends to go down. But Richard Heart has made Heart's law, which is just interesting to think about because it's going to be useful as we uncover what's going on. Now, friends, one of the biggest secret weapons to Heart's law, and I've got more videos coming out for you later on as well, is PulseX. This is the PulseX to pulse ratio, okay? You can see it's on the hockey stick. Now, remember, PulseX, when you're looking at all the bonding of the tokens, it is really, and I don't mean this with a pun, it is the heart of PulseChain. And I have a chart here for you. Let's just have a look. So this is PulseX, friends, and then everything is pretty much going to be derived from it. Now, if you look on chain, the truth is that Pulse is the heart, okay? It's actually Pulse. Pulse is actually bonded with everything. It's actually Pulse, PLS, that is the middle of everything, okay? And everything else is small. But there's a secret magic with PulseX. The magic is its real utility, okay? In crypto, we have a baseline economic activity, and you remember that term, baseline economic activity, which is speculation, okay? Trading back and forth, guessing and speculating. Things are going to go better, things are going to go worse. We trade a lot, okay? PulseX, friends, has a buy and burn feature. So whenever there's trading going on, it taxes both sides of the trade or whatever, and then it uses it to buy up the token, okay? So the token has pressure up over time, all right? So you know that now. So this is going to be important because if everything is bonded to PulseX, which they are, okay, over time, PulseX being bought up, right? People who want to come and trade the other tokens, okay, and PulseX wanting to come trade the other tokens, they're all moving each other up, okay? So you just remember that term in your head. Now, right now, we've bought and burned over 7% of the total supply, which is huge. And guess what? It's going to get bigger because we haven't even started, really. The bull market mania, there will be more volume, more erratic chaos up and down. We haven't even had exchange listings, friends. If there's an exchange that lists PulseChain PLS, well, guess what? The biggest bonding of it is to PulseX on chain. So I'll just show you that now, right here. The biggest bonding is PulseX and Pulse. So an exchange, friends, where let's say it's listed on an exchange, when the price deviates a lot, the bots will want to come in and they'll hedge it and they'll arbitrage it with PulseChain, the chain. So what they'll actually do is, so the exchange is over here. What we can do is just make like a, this is where the exchange is, okay? This exchange is sitting over here. And what the bots will do, let's say there's a Pulse PLS on the exchange, right? Let's say it's moving up and down. What happens if it moves up? What the bots will do is they will go to PulseChain and they will go to this liquidity bonding pair, all right? And what they'll do is they'll come and buy off of here. And then if it rises, then they'll sell it, okay? Then they'll sell it down. But pretty much it's making economic activity, just arbitrage and bots moving up and down, okay? So that's going to be very, very useful if exchange listings come, okay? So you remember Heart's law, got to think about that. You've got Pulse, everything's bonded, Pulse, Inc., everything's bonded to Pulse, everything's bonded to Inc. and HEX, and everything's going to go up together, okay? Now, it's not a cheat code per se, but it's interesting to think about. And what I mean by it's not a cheat code, it's because there is manual correlation that happens. If you disconnect the bonding, people will manually sell stuff together and it will actually match the same. All right? So that's actually what we found. So even if you try to like remove the bonding, it's kind of funny. Like if it's two people looking at each other at a party, you're not like talking really close to them, but you're like having fun. You're like, oh, I can see you. You're drunk. You're having fun. You're over there. Woo, having some fun out here, right? And when the party's quiet and everyone's sad, you can see that they're sad. You don't need to go and actually talk to them. It's kind of similar to that. And what we'll do is just crank it up a bit. Because it's going to tie into my next phase, friends. Now, you know Maria, James Osborne. He's the Atropa Dev. Atropa has a big, what we call liquidity web. Okay, so it's like this, Edge is what we call like an ecosystem. So you have all these tokens that are all bonded together and stuff out here, right? And actually, I'm going to give you a snippet. You see these things are bonded together. Thank you to Stevie, Coexistence Steven, and Buddy P over here. So they all bond to each other, do a lot of things, right? But I'm just going to give you the real explanation as to what's going on. It's going to be important, all right? So all you need to know about Atropa's liquidity web is that it's simply putting the cart before the horse. You ever heard that term? Putting the cart before the horse is like you do step 2 before you do step 1. Okay? Like example I'll use, which we'll reference again later on. It's like you're writing a love poem for a girlfriend. You're still a virgin, right? You don't even have a girlfriend. All right? You're like, hey, don't you think you're putting the cart before the horse? You've heard that. So what is the horse here? The horse is baseline economic activity. The cart is the re-hypothecated leverage on the money. Okay, so remember, the horse is baseline economic activity. Nay, nay, nay. That's how a horse talks, okay? And the cart is, like I said, it is what we have in the fiat system. So actually, friends, if you watch all my global liquidity videos, or any of them, okay, I often explain to you how it works, right? Just having a look here. So remember, the fiat system, friends, all the banks, so there are all these banks everywhere. These are all the banks, okay? These are literally all the banks. Yeah, all of these are just banks out here into the rest of the society. But the funny part is all of them have let's say this is like one string of banks, like whatever, 20 here. They will all have one collateral, all right? It's re-hypothecated. So this bank swaps with that bank. This bank here swaps with that bank, and like it's what we call re-hypothecated. It's the same collateral, like the US Treasury bill. It might say $1 billion, but they all have a claim on it, right? And what they do is, so this is what they do, right? So bank A, so if we just do it quickly, one bank, so here's B1. B1 has the collateral. They go to B2, right? And they say, hey man, we want to borrow off you, okay? And they go, oh, B2. They go, oh, B1. Wonderful. We'll give you like printed money, okay? But then what B1 will do is, then they go, hey, let me go to like B4, Bank 4. And Bank 4 says, oh, wow, you've got money too. Let me give you even more money. You see? So what's actually happening is B2 doesn't know, like their stuff is now on B4s. It's basically being used multiple places, okay? Now, how does this all not implode? Well, the government watches these very closely. There's regulations, there's capital ratios, there's all this stuff. And by the way, they all have the money printer, okay? Now, all of this can only work in a fiat system. What do I mean by that? You can print more money, yeah? You can print more collateral. The government can just print money, the Fed can print and do it, okay? You can't do this on a gold system unless you want to make it very, very dangerous, okay? Because if you have gold as collateral, you can't give someone else your gold. You have to give them a paper claim on the gold, you know, just like this lollipop. Okay, we've got a golden lollipop here, right? If I say to you, hey, this is my collateral, here you go, yeah? All you can do is give me a paper claim, okay? But everybody would have, if it's re-hypothecated, everybody has the same paper claim to the same collateral route. That's actually how the gold ETF works, by the way. In the HSBC warehouse, only I think 3 or 5% of the world in the ETF can actually claim the gold out of the warehouse, which is interesting. So you remember this term, friends. Now, the ultimate juice for baseline demand activity is going to be the holy grail for crypto developers. So I'll repeat that again. The ultimate juice is baseline demand for activity. In PulseX, what's your baseline activity? People swapping, okay? But you have Richard Hart's network effect. You're in the middle of the system. There's a lot of activity. It's like you have the first mover advantage, right? It's Richard's chain. Now, the Atropa ecosystem is just hypothecated leverage on top of the base tokens that they're bonded with. And we'll go explain that for you a bit, what it means, okay? So here's an example I use. So basically it means 100 millionaire guys are claiming ownership to the same one token, which only has a single $1 million on the bid. Okay, now, by the way, most of crypto is like this. Okay, so that's what most of crypto is, like where everybody thinks they all have money out here, but what's actually happening is everything is bonded to ETH, for example, on Ethereum chain. They all have the same claim to the ETH. They just can't see it. That's why when everything goes down, everything's slingshot leverage on the way down, right? And then a slingshot leverage on the way up. That's why when ETH goes down in value, everything gets basically capitulated harder. If ETH drops 20%, these things drop 40%, for example. And the same thing with ETH to Bitcoin, okay? Now, the example I'm going to show you here is this example here. So imagine you want to bond $1 million of HEX. So this is, friends, very relevant. Atropa Maria, he has EHEX. I forgot how much he has. He might have like $1 million worth of EHEX, okay? He has a lot of it, maybe more. But he actually has that. And he actually made a token. This example I'm using, he actually did that. There's like a H weird symbol hex, like call it HOX, that he actually made this token for. But I'm using the word paper because it's like it's more easier to understand. So you've got your collateral. You've got your actual hex, yeah, which is a collateral in the system. So to get re-hypothecated leverage, right? Remember, friends, just think in your mind, we're putting the cart before the horse. Remember I told you the baseline is economic activity, which is swapping and basically economic activity, right? We don't have that yet, but we're building this system first. So that's where the speculation comes, okay? So this is, you have $1 million of HEX in this example, right? And then say Maria comes and he says, I'm going to bond. So he owns the token, right? He owns $1 million of that HEX. He's going to bond it with a new Atropa token called paper. All right, so I'll just call it paper. It's a paper claim. Okay, so this is what it looks like. Paper is bonded to HEX. So provide liquidity, they're bonded, right? But here's the thing. He created the paper and he could go mint more tokens as much as he wants. All right, he could just go mint infinite supply. And it's actually similar to how all of the Atropa web works, right? So paper here, for example, might have $100 million market cap because you can just make as many coins as you want, right? You can make each token's a dollar of paper and I own all $100 million. There you go. And you bond it with HEX, right? HEX, for example, has a $1 million bid. Okay, so actually what this looks like is right here. So obviously this little thing is HEX. The big market cap is paper, right? You see that? So HEX's real liquidity is like this, right? And then obviously you go, wait, but Sami, isn't HEX a derivative of ETH? Yeah, so ETH's liquidity is even less and less, you know what I mean? So that's pretty much how it works. And what I mean by that is that's ETH's liquidity in the pool. Okay, how much ETH you can actually access in the pool. So in a nutshell, right, you had your $1 million of HEX, you create a token out of thin air, right, now that paper, yeah, and then you bond them. Now you have theoretical access to $100 million of market cap, yeah? That's your re-hypothecation leverage. You're like, whoa, I have access to $100 million. You go, but you can't really, right, because there's no bid to support it. The problem is, as I mentioned, you're only limited by the bid. How much is like actually that you can extract from it? And it's just HEX's bid, right? So your token, you might say, oh, it's useless. But remember, I said you're putting the cart before the horse. So in the real financial world, there's all this economic activity, borrowing and lending, and this guy's borrowing from here, and this guy invests in the stock market, and there's returns everywhere, okay? So the system is built, I guess, more robust, if you know what I mean, all right? Theoretically, you can send people your paper token, which is a claim on the HEX pool, but you still need people to truly value that $100 million of HEX, where they know there's only $1 million left on the bid. So remember, you got $100 million of the paper, but you're like, wait a minute, that's derived off HEX. So are people going to value this as $100 million? So that's why usually what happens, if you try this and you hand the token out, people go, oh, cool, I don't want this paper, give me the HEX, okay? But that's why you keep going it down. People say, oh, I don't want the HEX, give me the Ethereum. And then Ethereum has Bitcoiners in there saying, guess what? I don't want the Ethereum, give me the Bitcoin. Yeah, and then even go a step further, people say, oh, I don't want the Bitcoin, give me the US dollar. You see? So basically, you're just traveling along a risk curve. Yeah, and everyone's got an opinion on where they should be. In a bull market, we go further out the risk curve because we're more optimistic on economic activity erupting in all these places. And that's pretty much, you get to see that in my famous business ISM chart. People are happier to go further out the risk curve as business cycle goes up. I mean, up here, friends, people were buying JPEGs for 450,000 US dollars. Okay, up here, this is 2021. You see that? So it all comes down in a business cycle. So as you get to see, I mentioned here, right? When people start to sell paper, it crumbles. The HEX bid and the turbo leverage destruction occurs. But you might say, Shami, what if people start to buy paper? Well, if people start to buy it, the number gets gargantuanly big, right? But then it's so hyper volatile. Now you might say, like, it's something to think about. So what's the whole point of this? Why'd you even make this token to go do this? Why don't you just do the HEX thing? Well, that's the speculation part, right? In our economy, friends, the collateral, it can't move around in every place. The treasury bill, it sits on the banks. Yeah, because the banks are meant to be safe blue chip. Yeah, it's kind of like if people you could do this with Bitcoin, by the way, where it's too inefficient to just keep moving the Bitcoin around. Also, it's not even just inefficient. People want to borrow and take leverage on stuff. Yeah, if you have your gold, for example, people want to borrow on it. They want to borrow more than what they call the expansion of the money supply, to be able to cater to people's demand. Like if you have all these people who want to borrow money, but you've only imagine you only have $1 million of gold for a whole city, yeah? But all these people want to borrow money where you go, sorry, there's only $1 million to hand out. Guess what happens? There's no economic activity. That's actually what happens out there. Yeah, so that's why that's why the human society, all of us and central bankers have been coincidentally there to rob everybody. They've allowed the expansion of the money supply over time. Obviously, we know they take it too far. But that's why it's there. Because gold, it can't expand fast enough. Gold only mints at 2% per year. It doesn't cater to everyone's needs, right? It's not elastic enough, pretty much, or organic enough. Now, I mentioned here, the current existing financial system starts off with base economic activity as people trade in barter and gold. So I want you to take it back to the basics, right? It all started with barter and gold. People swapping mog glasses for a lollipop, for example, all right? Then we made fiat and landed on re-hypothecation leverage as we do today. However, all this fiat system fugazi is only able to maintain value and operate because there was basic economic activity underpinning the whole financial system first. We build the leverage on top of the basic economic activity. An example in this picture, just like for Atropa. So this is Stevie's thing. So all these re-hypothecation stuff, that's what it is. That's a trope. We're bonding this and moving this and these ratios. But it all means nothing without economic activity. Yeah? You need economic activity. Now, you might say, Sonia, what's economic activity in crypto? Well, that is people using Aave, borrowing and lending, swapping. And crypto, right, we're starting very, very low, right? Keep your expectations. So what do people do in crypto? Well, Bitcoin literally does nothing. So there you go. Store of values on the shelf. So we have Uniswap, the DEX, trading back and forth, people swapping stable coins for payments, taking a bit of fees. We're starting, we're starting. But that's pretty much it, right? Basic economic activity. And then you can get all the borrowing and re-hypothecation on it, I guess, later on as the fiat system moves on, okay? So once again, see all these this web as it comes out here, everything bonds to this, mints to this and stuff out here. And there's this web stuff coming out. So the baseline, friends, in crypto, when you start creating a liquidity web meant to mimic the financial reserve, then you need to be building for that economic activity. Okay, so now here's the thing. We could speculate. We're hey, this Atropa ecosystem with all these tokens out here, right? There's 20, 30, there's this big web, right? You could say that you're just super early, which is a fair point. However, remember, it's still important to build for the economic applications, but they're really hard. They're really hard. Like, think about it. For example, Richard Hart didn't invent PulseX, right? We had to try all these other things, and then the Uniswap formula came out, Uniswap, and then that pushed the industry forward, and it allowed everybody to trade, for example. Let me show you the Atropa ecosystem web. Look what it looks like, friends. Check it out. See this Atropa ecosystem. Teddy bear, legal, down, billion, 2, PDI was up here, DI, another teddy bear, Mantisa, PUSDT, see the and there's more that come out. So that when I'm talking about the web, and by the way, this is from this literally posted Feb 2024. You see that, friends? You see this it's convoluted. You're what's going on? Well, pretty much most of it was centered around PDI. Okay, which is actually, you can see PDI in the middle here. This is where the bid was coming from. It makes sense, right? Everyone's coming into crypto, PulseChain, they want to touch PDI. They want to lick PDI, they want to sniff PDI, they want to put their left hand on PDI's right shoulder. They're coming in for PDI. Okay, so they're buying PDI, they're putting in the bid, and then everything else is re-hypothecated on. But what Maria did was, he got 3 billion PDI that he owned. He bonded it with Atropa. right? Now he can do the whole Atropa ecosystem. But where's the baseline liquidity come from? PDI. That's why I discovered this last year and I noticed, oh, PDI is a spear. And that's why if you check all the ratios, for example, friends, I'll show you. Most things, so I noticed this like last year, right? And I was talking to you about it. Most things just bleed against PDI. That's what happened last year. So look, friends, look at this. This was literally January 2024. And look at this. This thing just kept bleed. This is teddy bear, okay? Just like bleed, 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 bleed. Look what happened. But then a giant wick comes up. Wow. Is that because Atropa's strong? No. Catty comes in, kills PDI. She drops at 99.94%. That's not all the bid coming in for teddy bear. Also, you can have a look at the Atropa ecosystem. Check this out. Even though Maria buys 3 billion PDI and bonds it, it's funny how, look at this thing over time, friends. Right before the big catastrophe, this thing naturally was freaking just gradually getting down. You see how it's just grinding down? Look at that. It's just literally, it's coming down. What is that telling you? It tells you everyone's coming in for PDI. So it doesn't matter if your PDI is behind the wall of all this Atropa. People are literally charging through the wall to grab the PDI out of the pool. That's actually what's making the thing go down. Until you see the big catastrophic destruction, PDI gets dropped. And then look at this. And basically the spread goes up. But that's why I actually think you let this thing go. This thing will eventually go back down to these ratios that it wants to trade at. All right. So remember, it's all about that basic economic activity first. So in a nutshell, this is like writing a love poem for a girlfriend when you're still single. Sure, you might get a girl one day, but it's probably better time spent working on obtaining a girlfriend first. And this is why the Atropa liquidity web can't peg all its ratios right now. There's all these like deemed big ratios, but everyone's looking at them. They're like, hey, how can this thing peg to this? Because then it has a $20 trillion market cap. It makes no sense. Everyone can even see it. And it's actually what's happening. They're all like fugaziing up and down. But actually what's happening, friends, is this liquidity web and like the bid is going from one coin and it goes to coin number 2 and then coin number 3 and then coin number 7 and then coin number 10 and then back to hopefully back to coin number 2. It's just moving around the bid, but it's not doing anything. It's like friends, you know, an economy with the banking system, right? If shadow banks, when they start swapping their re-hypothecation dog shit between them, that does not impact you trying to get a loan because you're a mechanic and you want to expand your factory, for example. You know what I mean? They only get to do the trading because you went out and took the loan in the first place. You have a demand for the money, then they go do the sources. You know what I mean? So if all this actually happened in GFC, right? The leverage was like 30-1. So there was basically like a baseline economic activity, but the amount of leverage all the banks were taking in the background was like nowhere near related to how small the economic activity was. It was like so gargantuanly big. So then what happened is the baseline economic activity, once it contracted a bit, all the leverage come basically exploding down. All right. So this is going to lead us to speculate on the future. Maybe in the future, we see enormous crypto activity on PulseChain and it's all coming together. If you are long on PulseChain, you are betting on this future at least having an attempt to occur. The baseline economic activity is expected to rise in the long-awaited bull market. So what does that mean, right? So people will trade more, right? Most with Ricky, with Benny Blanco swapping Ricky for most and most for Ricky. He's swapping around. Everybody's swapping their meme coins and the JPEGs and the pump tires. And then the JPEG Cardanzo comes out. And then everybody's swapping the Pokemon coins and Pika. And then some to PDI, PW, you know what I mean? All these, it's kind of funny, but baseline economic activity, just people swapping shit around. But yeah, that's crypto, friend. It's like until we're like slowly building in proper use cases, to bring the real economy in, that's what we get right now. Okay, so you're basically anticipating that future. PulseChain will rise up as people join the ecosystem and participate everywhere. However, this can only lead you to speculate. So number one, is Atropa going to play a bigger part on PulseChain or is it just fluff? Because a lot of the Atropa web stuff, is it an oracle? Is it trying to help the PDI thing? That might come into play, right? Because if PDI is part of it, right, that's the baseline economic activity. Because if this thing's $1, people are minting it, they're borrowing it, it's stable coins, that's baseline economic activity. Okay? Because why? Think about it, friends. Everybody has a bank account now. Yeah? if you are in PulseChain, yeah, PulseChain, HEX, or even PulseX, it's not bank account money. Okay, you're a unique, different asset, but people want to sell you in a bull market. They don't want to save in you, yeah, at all costs, right? With a stable coin, they do want to save in you. It's your baseline. Okay, so it could be, you might say, oh, that might allow you to earn yield, DCA, loan your money out, right? DCA and the bear market and stuff out here. You see? So that's the future. I know it looks hazy now, but we're early, man. Like we're trying to put these pieces of the puzzle together. I'm here trying to catch you with the Pokeball every day, which I haven't got you. You see, we're trying to put all of these pieces of the puzzle together, friends. And we're going to pump it. So at least you can see, right? It just, you don't have to really fully understand everything like I do, but you can understand, oh, things are happening. You kind of get it now. There's a future. It's hazy right now. Christopher Columbus has come into America land. He doesn't know how everything's going to get built. They're building the ports. They're making the little farms. You don't know that New York City is going to get built. You know what I mean? You're just predicting. Something's going to happen, right? So here I go. Maybe if the PulseChain pioneers continue to build out PRV, P-Curve, P-Badger, P-Comp, and other protocols, then we'll get more concrete answers. As a pure guess, maybe the baseline economic activity involves PDI somewhere, but with the MakerDAO killed by Catty, it can only leave us with more questions than answers, all right? So you want like all the answers? We didn't get all the answers. If there were a lot of answers, the prices are up 15x from now already, okay? If people are borrowing and lending PDI, then this is the lifeblood of economic activity on the chain. Once again, we are left in the dark. I'm still holding and waiting for the cycle to continue. Spare commissions, ma'am, please. So, obviously, having a joke here that we live in our cardboard box, having fun. So, you understand it, right? So, Atropa, it's built the financial ecosystem, the re-hypothecation part, but we don't know how it plugs in. We just don't know, right? Because there's no use case for anything. It's literally just like, we have a chain, there's people here, they're doing baseline economic activity and swapping, but you get what I mean? That's what it comes down to. So I hope you understand this now. Liquidity bonding, remember we started off showing you Hart's law, they move up and down together, but this is like a turbo leverage version of that. Okay, so it's not just bonding, because remember, when Richard Hart's say bonding the coins, there's not like an infinite supply of these. You can't just go make heaps, right? It's limited by the PulseX and Pulse. But actually kind of is, because he's got a lot of the OA supply. He just doesn't use it to do any bonding, right? He just doesn't do that, okay? But theoretically it could. Right, with Atropa though, you know, Maria makes a new coin, Magdala coin, or Leaf coin, or Bulbasaur, whatever it is, or Pika, you know what I mean? And then it bonds to something else, or the collateral. But yeah, it's just swapping around ratio Fugazi stuff. Yeah, there's no baseline economic activity which it underpins. Right now in crypto, like I said, the baseline economic activity is just guessing where the price is going to be in the future. All right. So, you know, in an economy, not everyone's doing that. You know, some people's building a house, building a park, providing financial services, repairing someone's squeaky chair, right? It's not squeaking anymore. They've got to make it squeak. You know what I mean? That's baseline economic activity. You need equipment and loans and stuff out here for now. We don't have any of that in crypto. It's literally, that's why everyone looks at it like it looks like barren land. But I guess you got to be a visionary to see. Okay, so now you get to see after all these friends, liquidity bonding ain't a much of a secret source, but you get to see, right? Like if something does eventuate in the future, PulseChain does go up, there's more people here, maybe these things plug into something. Yeah, you know, you might even say, sorry, can't Maria just like fix everything and just like tell us? Very good question, my friend. Problem is, he doesn't speak English. He speaks in schizo-autistic. He speaks in like riddles, L. Ron Hubbard, dialectics, CZ video of Somi, one word here. It just does like a poopy emoji. And like, bro, what does it mean? What does it mean? There's just, yeah, I don't know why. I don't know why. Maybe so no one knows what's going on. Maybe so he can accumulate certain ratios of coins. God knows. We don't know what's going on, okay? At least know you have an edge. You have an edge. You won't get trapped in anything, but also there's more to it than meets the eye. Like, subscribe, Billy Button, or catch you soon.